presentation contains current opinions of Moez Ansari, Chief Investment Officer of Pullback Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Pullback YouTube update for November 18th, 2024. I'm Mo Ansari, President of Pullback Asset Management, and thank you for joining me today. First of all, I want to remind all of you to click on the subscribe button so whenever I put an update out, you will be notified, and it is absolutely free, so you will know what is going on a weekly basis. Let's start with the numbers. Market down about 2% last week. As I'd mentioned last week, we were on a fifth wave top, and we're starting to see that little pullback. I think we should go more sideways to a little bit lower on the market. Dow was also down 1.17%, NASDAQ down 3.13%, and the big loser last week, again, the Russell 2000. Javed and I talked about that in a lot more detail on the podcast last week, and that is exactly what we're starting to see, how the market is starting to unfold. Looking at the numbers, financial was the best sector last week. Worst sector was healthcare. And I think that is a new administration adjusting to the new policies that might come into effect. And one of the areas that could get hurt is some of the pharmaceutical companies that have made big profits, and we'll see what changes happen there. Oil was down last week, back up today a little bit. So it's just going back and forth. Again, I think 66 is the bottom, 74, 75 is the top, and we're going to trade in that range until we see some resolution one way or the other. Interest rates sharply higher. We went from 4.3 to 4.43 last week. So a big move up in interest rates, and that is what really had the negative effect. Powell came out last week and said that they're not in quite as much a hurry to bring rates down, and that sort of took away the expectation that we might get another interest rate reduction in December, and that caused the market to get a little bit nervous that, oh my God, we're not going to get the interest rate reduction. Well, we have to look at why Powell said that we might not get, the Fed has to be more cautious in rate reductions. That's because the economy is doing great, and that is always a good sign for the stock market overall. Even with rates where they are, around 4 to 4.5% for the 10-year, the market continues to move along, even though we're going through a little bit of a pullback right now. Housing, key to inflation and interest rates going forward. Housing, it was a little sticky. We got the CPI and the PPI last week. The biggest sticking points were used car sales, which I think prices were up a lot. I don't think that's, I think that's just a 1 month blip because of all the floods and all of the hurricanes that we saw in Florida and other areas. And also we saw housing, the rent and housing, that is one thing that is not really changing that much. It did not come down. As a matter of fact, it was up and was about a third of the contributor to inflation last month. I think, again, that is transitory. I feel that overall interest, we see rents and rents continue to come down, and I think that is going to be the case. Even though we don't have a lot of inventory out there, that is the biggest problem with home prices right now. Not that everybody wants to pay more, there just isn't. If you want to buy a home, and some people have to move, some people do want to buy a new home, but to do that, you have to have inventory, and that's what is really lagging right now. Might take a year or two for the inventory to catch up, but in the meantime, that is what is holding up rents and real estate prices. CPI came in just about as expected. PPI slightly higher than expected. Retail sales up 0.4. That was more than expected last week. So those are the numbers that we got. But inflation at the wholesale level and the consumer level are about where it was expected to be. So that's what we're seeing. Retail sales about as expected. So we're going to see where we go from there. This week we get a little bit more data. Looking at the technicals, here's the 20-day moving average. I marked out this fifth wave top. When we see a fifth wave like we did here, we saw a correction. This is an ABC correction that we get A down, B up, C down, and that's what we saw once we see a fifth wave top, and that's what we've seen. We gapped up right here, tiny gap right here. We gapped down right here, leaving what is called an island top. Usually that is a turning point in the market. So I would not be surprised. We were at the 20-day last week. Today we're sitting right at the 20-day. We're trading around 5,900. The 20-day is 58.78 on a daily basis. 57.80 will be the next support. And then we're looking at quite a bit lower. But I would look at the weekly charts and go with that. Looking at the weeklies, support comes in somewhere around 5,600. We're at 58 to 5,900 right now. So 5666 is the number, but this is moving up a little bit. So we could see around 5,700, a couple of hundred points to the downside. That would be a weekly fourth wave down, and going to the dailies, coming down to 5,700 would put us somewhere around here, 5,800, a little bit below that would be around here, this support level right here at 5,700. And that's what I wouldn't be surprised to see that at all. Looking at the NASDAQ, again, leaving an island top right here, gapped up right here, gap down right here through this gap. Last Friday, we are trading right at the 20-day moving average, which is 18,768. This afternoon, we're trading right around 18,797, so right about there. Then we have 18,303, which is the 50-day moving average. But again, I'll go to the weekly chart, which is around 18,000. That's about 800 points lower than where we are right now. And I wouldn't be surprised again to see a test of that on the downside. Looking at the 10-year note, big move up to the upside today, but then we are down. Rates are down just slightly. We were up right around the 4.9%, 4.5% this morning. High was 4.481. We're trading at 4.41 right now. So we opened right at this resistance area I pointed out at the beginning of this month, a few weeks ago. If we get above 4.49, then 4.63, then 4.73, which is this high and this high right here. So I would watch this carefully. If rates come back down to about 4.31, which is the 20-day, and then 4.2, which is the 200-day on the yield, I think we could see some more pullback here to the downside. This could be a wave 3 top, then a pullback, and then we move again to the upside. But in the short term, we could see some rate pullback like we saw today, but I don't expect it to get much below 4.31, so another 10 basis points to the downside. And that might give us a little bit of support in the short term, but longer term, if rates do start, this is a wave 4 to the downside, and then we start to see a wave 5 back up, we could see higher rates, and that could put more pressure on the stock market in the short term. So sideways to lower is what I'm looking for prices in the short term. But again, if we do get some meaningful pullbacks, I would still view those as buying opportunities. Oil, which was down big, is up today about $2.20, coming off this low right here, which is close, not quite to this low, but also bouncing around. But we're still below the 20-day moving average, the 50-day moving average, and the 200-day is right here. But Middle East tensions, they go up one day, down the next day, and that's what's driving oil prices. Small cap down big today. It was up here, got to 242. That's what we saw last week, and got right to this 245 area that I've talked about for 6 months now, that I've talked about as this market has gone up. Could see this is a wave 3, wave 4 pullback, which could bring us down to 219. We're 229 today, so a little bit more pullback in the small caps, but then eventually if it can get above 245, which would be a breakout above this, that will be a multi-year breakout out of this channel that we've set up for the last 2 years, just gone back and forth, We can finally break out above this, head towards here. That would be a very good sign. But that would happen if we need lower interest rates, we need less regulation, which will help the small cap indexes. That's where, and if you see tariffs, that would be negative for the large cap, but good for the small cap indices. Gold, as I said, again, we saw wave 5 here. When we saw that around 2,800 a couple of weeks ago, I said it wouldn't be surprising to see a pullback to 2650. Well, we broke right through that, and now we're looking at about 2,400, even though we're big, up about $44 today in gold at 26. But again, this is wave 1, 2, 3, 4. This is the 4th wave, and then we see a 5th wave to the downside. So I think, again, we might have made a short-term bottom in gold, little bounce up, then another pullback to the downside in gold. Now I'm looking at around 2,400. I don't think we get all the way down to the 200-day in the gold market, but those are my views. That's the way I'm looking at the technicals of these markets. Again, if you want these updates on a weekly basis, whenever I do them, just click on the subscribe button. If you need help with your portfolio, just drop us an email at invest@compact.com or call us at 800-388-9700. The analysis of your portfolio is free. We'll get in touch with you, do analysis where you are, and set up a roadmap to show you how to get from where you are now to where you want to go financially. Invest@compact.com or just call us. I'm Mo Ansari, President of Compact Asset Management. I will be back with you at the same time next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.